Namaskar to all. So students, in today's class we will be studying about the income method that was left and the expenditure method of your national income, which is a part of your macroeconomics in class 12th. In my previous videos I have already covered the value added method, so you can refer to that. But before we start, I would request all to kindly, if you're liking the videos and you're understanding the concept, so do subscribe and like to the channel. And in case you are interested to opt for the online classes or any career related queries that you have in grade 11th and 12th, you can contact at the below number. Okay, so let's get started now. So students, these were the three methods of calculating the national income. We have already discussed the production, or you can say the value added method. Then we had the income method and the expenditure. So we have already covered this first method in my previous video. Now we will be focusing on the income and the expenditure method, and we'll solve the numerical simultaneously. Okay, so students, for the income method, we know that domestic income is always calculated at NDP at FC, and whenever we add the items over here that we are going to study, which is your your compensation of employees, operating surplus and mixed income, whenever we add these three we get NDP at FC only, which is nothing but our domestic income. So we know domestic income is always represented by the NDP at FC. So income method is not that tricky. In order to understand, whenever you add all these up, you will get NDP at FC only, which is nothing but your domestic income. Okay. Under the compensation of employees, the first thing is wages and salaries in cash. So whatever the basic pay, the DA that we have, bonus, all that is being paid in cash will be included over here in this first COE, compensation of employees. Then any wages and salaries which are not given in the form of cash but any non-monetary benefits in kind, that will be included over here, right? Like you have your rent-free home, you have your free car, or you can say free medical and educational facilities that have been provided to you. So basically COE give you the benefits which the employer gives to the employee. It always has to be from the employer to the employee, right? Any payment made by the employee or any third party payments made are also not included. So always remember, there are two categories, there are two people over here, employer and employee, and the employer needs to provide the benefits to the employee. The third is the employer's contribution to social security schemes. Now here students, what we are talking about is that what the employer is doing in order to provide the social security benefits to the employees. Now that could be in the form of PF, Provident Fund, that could be in the form of any labor welfare funds that are there. Basically the aim is to ensure that there is safety and security for the employees. So this is the third subcategory under the COE. Now when we talk about the operating surplus, under the operating surplus, the first that we have is income from the property. Income from property generally includes your rent, interest, your loyalty. Rent, we all know that it is a part of the national income which comes from the ownership of any land or building. That is what we call as rent. So any payment that is being done, it includes generally both your actual rent and the imputed rent, both are included. Actual rent, we all know that whatever the rent we have given out of the land, and the imputed is the self-occupied properties. So these are included. Royalty also, we know that whenever we grant some leasing rights, right, so that are there in the royalty. And interest, if it of course says that whatever the amount that you have received for lending the funds, but when these funds that have been lended have to be for some productive activity, for some production unit should be there, which means factor services need to be generated. So these are the three subcategories out of it. And when we talk about income from profits or entrepreneur, here we have the first one we say is dividend. We can say dividend, or there's another name which is distributed profits, right? So dividend is basically, it's that part of the profit which is paid to the shareholders, right? Then we have the undistributed profits. Undistributed profits, or you can say the retained earnings. These retained earnings again are a part of your profits only, and it generally talks about that whatever the whatever you have kept as reserved, or in order to meet some unexpected events. So for that we take retained earnings. And third, of course, we have the corporate taxes. The corporate taxes, again, we all know that it's paid to the government. It's a direct tax which is given out of the total profit that we have earned. So always remember, under the profit we have three subcategories. One is the dividend, also known as the distributed profits. The other is the undistributed profits or retained earnings, and the third is your corporate taxes, right? Now this one, the third broader category, is the mixed income of the self-employed. Mixed income of the self-employed, it basically says when you cannot categorize some person into, directly a service or a business over here. Like we can say that there is a doctor who is operating his own clinic, also he goes to the hospital and treats the patient. So basically he is earning a mix of, in a way we can say that he has wages, he has profit. So there are a subcategory of it which we cannot bifurcate him purely under one unit. So in that cases we have the mixed income, another category has been created for that, right? So these are the three broader categories under the income method, and we can have a view also over here that we just discussed. So loyalty, it also talks about your patents, copyrights, trademarks, right? And this is all that we have just covered, where we say that, what are the wages and salaries in cash. You can have in kind, which is given in some kind of a non-monetary benefit. And rent definitely includes both your actual as well as the imputed rent, right? Interest needs to be rendered in case of a production activity only, right? So moving ahead now, so having a overview of it. So in order to calculate, and when we solve the numericals, we have factor income from all the three sectors, which give us nothing but the, like we added COE, operating surplus, and mixed income. We got NDP at FC, which is our domestic income. And then if we need to go at GDP at MP, what we will do, we will add the NIT and the depreciation to it. So you can just simultaneously approach all these values by the conversions that we have. That's all that we have to do in this, right? And then we have a brief overview of this in a form of a flow chart where we are adding all these values. So we get the domestic income, NDP at FC, and whenever we add NFIA, we land up to NNP at MP, which is nothing but our NNP at FC, which is nothing but our national income. Windfall gains, like any income that has been generated from lottery method, it's not to be included because they are not accounting for some production activities also, and they do not contribute to the current flow of goods and services. Then any sort of capital gains, that should also not be included. Like for example, they have stated over here sale of the second hand goods and financial assets, because again the income when it was generated, that has been already accounted in the year when it was being sold. So in that case the second hand goods are not to be included, right? It will not account to the current flow for the current year. It will not account for any goods and services, so here we do not include them. Then transfer income, since they are a non-production activity, it's not a two-way transaction, so we do not include. Imputed value of services provided by the owners of production units, yes, definitely this will be included. Why? Because these are the production activities, and again they add to the flow of the goods and services, so this will be included. And any income that's been generated from the past savings, that is not to be added. Why? Again the same reason, because they do not add to the current flow of goods and services. Always remember that in the initial sessions we have just covered that what is the domestic income, national income. There's always a word that's been used that we are talking about the current flow of goods and services for the particular year during a given period of time. So that is why we'll not be including any past savings also. Now let us solve few numericals. We've just talked about the income method, so we'll move from basic to complex. So this is one of the numerical where they have been given a rent, royalty, interest, compensation of employees, and they're asking you to calculate NDP at FC. Then again we have profit and mixed income. So we have just studied what are the various components of the income method, that rent, royalty, interest, yes, they have to be added. They are part of the what do we call operating surplus, and of course the profit is also there. Then the broader next category is COE and the mixed income. So we will add all these values, and whenever we add them, what do we get? We directly get the domestic income, which is the NDP at FC. So see, we have added all these items and the answer is 3600 crores. So never forget to add the unit and the rupee sign over here, otherwise you lose a mark. So this is quite obvious, so do not do any kind of silly mistake. Okay, let's move to another numerical. Now over here we have compensation, we have rent. Okay, these are a part of the income method. Wages and salaries are there. Now remember students always that whenever you are being given a broader category, COE, because see, we know wages and salaries are a part of COE only. So when COE is given, we will not take wages and salaries. We will not take this because wages and salaries are already included in the COE. So always remember this thing in mind. Then net exports we do not take into account because again it's not a part of the income method. NFIA will be used in order for the conversion, because over here for the national income, what do we require? We require NNP at FC. So here it will be used while we'll be adding the NFIA. Profit and interest again are a part of the operating surplus, so we will be counting that. And depreciation over here, we do not use it because ultimately what do we get under the domestic income? We get NDP at FC. So we do not need to convert, we already need NNP at FC, so we will not take depreciation. It's just to confuse you. So let's move ahead and see. So over here NNP at FC, we have added all these values. Wages and salaries we will not be taking, right, because already COE, a broader category, is given to us. We add these items and we get 1380 crores as the answer. Okay, moving to the next is the operating surplus. Now from here you will be given. Okay, now let us solve another numerical over here where it says that we need to calculate the operating surplus, right? Whenever we need to calculate the operating surplus, what we will do, see, there are various items. What they have done is they have clubbed two methods. They have as you can see, we have sales and we have IC, right? We have the intermediate consumption over here. So what we are doing is, from this value added method we'll get GDP at MP. From this GDP at MP we will use it in order to form an equation for the income method, and then we'll get operating surplus from here, right? If you can recall, value added method, what do we have? GDP at MP is basically nothing but value of output minus the IC. Value of output is sales plus change in stock. Since change in stock is not mentioned, we'll assume it as 0. So we'll take sale minus IC, which will give us the GDP at MP. And then what we will do, once we have got the GDP at MP, and from this GDP at MP we'll form an equation like this, which we are talking about how we are landing up to. See, till here the compensation and mixed income, what we are doing is, since we need to calculate the operating surplus, we have taken the operating surplus on the left hand side, and then of course we will need to deduct the NIT from here in order to go from this thing, in order to calculate the operating surplus, right? And of course we'll deduct the compensation of fixed capital also, right? So this is how we have formed an equation, and then we get the answer as 1500 crores. Okay, so now moving to the next method that we have is the expenditure method. So expenditure method tells you from the point of view of the expenses that how we are calculating the domestic income, national income. This is another method. See, by all the methods the answer will be the same, but there are different ways of solving the questions, right? So basically we know someone's expenditures is another's income, and from this expenditure, like how we are generating the income, right? So let us study in in detail. Again, it has various components. Now over here, whenever we'll add these components that I'm just mentioning over here, these are the 4 components that we have. So now whenever we'll add them, we'll get GDP at MP. From this GDP at MP, then we will, calculate the NDP at FC by deducting the depreciation, right? In order to find the domestic income and national income, we just need to add the NFI here. So these are the basic conversions. Ultimately, whenever you add these all, you get nothing but the GDP at MP. And from that GDP at MP, you have to calculate the domestic income, which is your NDP at FC. So we'll understand this in detail. See, private final consumption expenditure basically tells you that from the point of view of the households, or you can say private non-profit institutions, what kind of expenditures are being made. From the point of view of the government final consumption expenditure, it basically tells what are the basic general government expenditure on basically defense, law and order. So those are being calculated. Basically, whenever the point of government comes in, we need to understand the basic aim is to have the social welfare, right? Third, we have gross domestic capital formation. This we are going to do in detail because it again has various subparts. And net exports, we know it's nothing but your exports, which we denoted by the X. What are the exports? Basically the expenditure of by the foreigners on purchase of domestic products. And then we'll deduct the imports, which we denoted by M, and imports is nothing whatever the expenditure our residents are making on the foreign products. Okay, so now what we do is from whenever we add these up, what do we get? We get GDP at MP. From that GDP at MP, in order to calculate the domestic income, which we know it's always denoted by NDP at FC, we'll deduct the depreciation and the NIT, and in order to calculate the national income, we will be adding the NFI. So this is how we will be taking into account. These are the all things that needs to be kept in mind, in order to make you clear the concept by a form of a flow chart. So this is that we all discussed right now, right? And yeah, I was talking about majorly this third point, gross domestic capital formation, right? Under this, they have again 2 subcategories. One is the fixed investment in the form of the fixed assets, and the other is the inventory investment. Inventory investment, you all know, it's change in stock. You've already studied under the value added method, right? Now, what are these 3 items? See, gross business fixed investment, it's basically talking about the expenditure on purchase of new plants, machineries, okay? And gross residential construction investment, it basically talks any kind of expenditure made by the, construction of new houses by the households. So this second component, this will not be coming under the private final, because students sometimes confuse it by the consumption expenditure. Please remember, it's a kind of the fixed asset that is being generated, so it will be included under the third category, which is your gross domestic capital formation. And then the third point that we have is gross public investment. Now what is this? This basically, any construction on the flyovers, roads, bridges. So these are all kind of the fixed assets. And then when we add this inventory investment, then we get the gross domestic capital formation. Please always remember, sometimes an item is given to you like gross fixed capital investment. So whenever that is given in the numerical, they are giving you this subpart. So you always need to add the inventory in order to land up to the broader category, which is the gross domestic capital formation. Now again, let us study few precautions over here, right? And the first one, it says that imputed value of owner occupied houses should be included. That was the same that we just talked about the in the income method also. That is there, right? Because in order to it's a part of your national income, since these are the production activities, so we will be including it. Second hand goods not to be included. Any purchase on the bonds and shares not to be included, okay? So these are because these are the financial assets, and these financial assets are just the paper claims, and there's only a we can say the transfer of the title is only there. And but however, any commission, or you can say any brokerage on such financial assets, that will be included. All the intermediate goods, they are not to be included. Transfer payments, it's not a productive activity, so we will not be including. Okay, so as we did for the income method, let's go solve some questions for the expenditure method also. So you can see over here, students, the first one is quite simple. Tells you about the private final consumption, government, gross fixed capital. See, the word is used fixed and it is not given gross domestic capital formation. So what you will do, you will be adding the change in stock. This will give you net exports, which is exports minus your imports. So let us see. Over here we are adding the gross fixed change capital. When you add this item and the change in stock, you get gross domestic capital formation. So we have solved this question, we have added the items and we have got 2200 crores as the answer. Next, now it says calculate the gross fixed capital formation. Now they are talking about some subpart over here, but see, they have given you gross domestic product, GDP at MP. A broader category is always been given. So in such questions, all you have to do is you have to form an equation where you can get the gross fixed capital formation. So private, yes, it will be included. Government will be included. This is also a part of it. Opening change in stock, this will give you inventory investment, right? And this is a part of your, again, gross domestic capital formation. So this is a kind of equation that we get, right? And the net exports. So all we have done, and because we needed to calculate the gross fixed capital formation over here, so from the GDP at MP we have deducted private, government and our inventory investment and of course net exports. So what we get GDP, because ultimately when we add these items we get GDP at MP only. So in order to calculate one of the subcomponents, we have deducted these items from the GDP at MP and we get the answer as 1150 crores. Okay. So these were the few questions by the expenditure method. I would request everyone, in order to have a good grip on these numericals, all your three methods, please solve all the numericals that you have solved, unsolved, all of them, in order to understand, because in this mastery can only be achieved by practicing more and more questions. Now there are, again, I have collated some of more numericals by the income and the expenditure method, where we have both the methods, because generally we have seen under the CBSE examination we do get such questions, well, under the 6 marker, where by income and expenditure method we need to calculate the national income. And one thing to always remember, whether it is income, expenditure or the value added method, you need to calculate any particular, like your national income, domestic income, all these methods will give you the same answer. So this is one of the questions that we have. And over here, first we'll focus by the income method, then we'll go to the expenditure. So students, while we talk about the income method, let us see what components can be included. See, compensation of employees, yes. Then mixed income, yes. Then we need, this is a part of expenditure method, yes. Then we need rent, of course. We need interest, we need profit, absolutely. And what are they talking? This is a question of national income. So in order to calculate, see, already when under the income method, when you add all these components, what do we get? We get NDP at FC. And in order to make it to NNP at FC, what will we be doing? We will be adding the NFIA. So these are the various items that we will be including. So let's have a look over here. See, this is all that we need to do. So never hesitate by the long questions. It just gives you a broader understanding as to how we need to calculate. So this is how we will be calculating by the income method. Now let's just go back and see how do we solve it by the expenditure method. Now for the expenditure method, let us see what all we need. So we need our, okay, imports is there, okay, this is required, absolutely. Then what do we have? Gross fixed capital formation we needed, yes. Then of course, what is the next? Change in stock is what we require, absolutely. Then government final consumption, I missed the private will be included over here. And since we need to go for the exports, because we need net exports, so exports minus our imports. And Then what do we need to calculate? While we'll add them up, they will give us students GDP at MP. They will give us GDP at MP, but we need to calculate the national income. So what will we be doing? We will be deducting the depreciation, which is consumption of fixed capital. We will be adding the NFIA, right, which is there, and of course we will deducting the net indirect taxes. Now you can see over here NIT is not being given, there is a breakup. So what we'll do, indirect taxes minus the subsidies, this. So we'll deduct accordingly the NIT. So these are all the items that are to be taken under the expenditure method. Now let us just see how they have calculated. This was under the income method, we've already done. So under the expenditure method, I hope you're getting the same answer. So you must be getting 670 crores. So under both the methods, now you can see the answer is the same, right? So this is how you need to solve. So after this, we have another one more last question. So this is how we will be solving the questions whenever we have been given for calculating the particulars by both the methods. You need to first study what all the items are there, what majorly are they talking about the income and expenditure, and this can only be done when you are very sure about each and every particular of the method, which means you should be knowing what all compensation of employees include, operating surplus, mixed income. Under expenditure method, when we have gross domestic capital formation, it includes 3 subcategories. So this is how you need to imbibe a good questions, or you can say this can only be done by solving maximum questions that we have, and there are ample amount of questions on the national income. So try to solve each one of them from simple to complex, and in case again you have any queries, then you can always mention in the comment section or at the number below, right? And thank you for watching the video. I hope you are able to understand the concept of income and expenditure method. So take care everyone. Thank you.